morning, all. How are we doing? Good morning, Senji, Thought Feeder, Evil, Paul, Amy. It's time. Martin, Franco. I forgot to put all the streams up this weekend because it was bank holiday. So I literally just whacked them all up this morning. So if there's nobody here, it's because I didn't basically put any streams up. Anyway, 15 people. Just chat amongst ourselves. Markets seem quite lively today. Yeah, it's day after bank holiday, so be a bit more liquidity this morning based off of the that's my ADR dash gone. Based off the Aussie movement as well. We've had obviously Aussie news overnight, so some movement off the back of that. But yeah, we'll have a look at it all in a minute. Morning, Steve. Right, so this morning it is Aussie dollar rates. We'll have a look at those in a sec. Not massive movement on it because we got an as expected result. So this is this week's news. We'll go through this and then we'll have a look at what's happened over the weekend, of which not a lot apart from the escalation in Gaza. But basically, we had the Aussie rates this morning, which came out at 4.35. We knew it was coming out at 4.35, so there was nothing exciting there really, or no shocks, I should say. So we'll have a look at the RBA press conference and notes there, but it was basically neutral. So that was this morning. We obviously had no news yesterday. We had Jordan talking, which didn't really do a lot. And there's no more news today. So that's it today. There's no news tomorrow either. So it's just a really dead week this week. It's going to be an interesting one. So we've got no news, but two massive rate announcements. But this one obviously hasn't done a great deal today. But the next major news we've got is coming up on Thursday, which is the rate announcement for the pound. Again, that's not going to change. Absolutely no reason why it should. But we have got a press conference with Bailey, so it'll be interesting to see what he says. I suspect we're going to come out neutral and we're going to get a confirmation of the September rate change. Maybe. We'll have to wait and see. And then we've got unemployment claims and bond auctions on Thursday afternoon. And then Friday, we got GDP for the pound and we got the CAD unemployment. And then University of Michigan on Friday afternoon. So not a massive week for news this week. This is the main one of the week, but... you know, it's the main news event in terms of potential impact if something changes, but we know nothing's going to change, so we know there's not going to be any impact. We'll get some ADRs on that day, but not a lot else. So pretty much the same as we've seen in Australia this morning. Yeah, we'll get ADR hits, but it's not going to be off the scale because they're not changing anything, and they're saying they're not changing anything, so we know what's happening, which is nothing. So there's no real interest this week of anything. So it's just normal market movement. Whatever gets pushed will likely get pulled back because there's no reason for anything to change. See what we've got coming out next week. Not a lot either. Tough couple of weeks, I think. Financial Juice has suddenly got this... thing appeared. Don't know what it is. It's the guy that owns Financial Juice, I guess, FJ Elite. I'm suspecting in the next few months there's some kind of service going to be coming out which you can subscribe to, which will be their analysis. So I suspect it's some kind of money-making thing they're going to start to introduce. But there's a lot of this blue stuff suddenly appearing. Looks like they're giving out trading signals, which is great because it's the death of Financial Juice if they do, because it completely destroys the whole concept of Financial Juice, which is a serious news program if you start becoming a signal service. But anyway, up to them. They can do what they like. So looking at the week, it's going to be bloody annoying. I might switch services, to be honest, if they're going to keep doing this. It just gets in the bloody way. So looking at the news, let's go back to last Friday. So this is last Friday's news. As you can see over the weekend, nothing of impact at all, really. We've had the escalation in Gaza, so that is starting to heat up a little bit. not a lot else really going on until we get to this morning's rate announcement for the Aussies. So 4.35 as expected. Dip in the Australian dollar, mainly because we've had a rally in the Australian dollar. So they'll be using this news to undo this move. So, yeah, I suspect we'll get a few down days on the Aussie probably from the back of this news, but there's not really anything impacted there at all. So if you look at when the announcement was on the rates there, and then we had the press conference, this is the press conference. You can see there's absolutely nothing red in there at all. Everything that was said this morning in the press conference was neutral. There was no indication of increasing rates, no indication of decreasing rates. It was all data driven, usual stuff. So we're on our way to the 2% target, blah, blah, blah. Same as everybody else. There's no bullish or bearish stance from the Australian dollar. So nothing really to look at all there. There goes Bullock talking here. More vigilance on inflation risks. La da 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 da. So nothing exciting. We had German industrial orders this morning. That's it. So no other news today so far, apart from what Bullock's been going on about, which was nothing. God, this is bloody annoying. If they don't let you filter this out, I'm going to go to another news service. I can't be bothered to flick through this every day. I'm not interested in your open trade update on whatever currency you're trading. You didn't tell us when you opened it, did you? It's like showing us a trade that you've taken and going, hey, look, I've made loads of money on this. Oh, good. That's what most signal services do. Then you'll change the entry afterwards and pretend. Anyway, we also had this morning as well from Japan, from Takura. The yen weaker than 150 against the dollar is too much. So again, going back to this yen intervention that I've been talking about for months, that is the original level we were expecting the interventions to come at, 150. That is a confirmation from Japan of what I've been saying for the last few months. This is where it becomes uncomfortable for them to operate as a country. 150 it becomes very difficult for businesses to operate financially when the yen gets over that level. So they're just reconfirming what I've been saying for the last few months, which is basically if it pushes above 150, they have to stop it. So it's confirmation of that level. They keep saying there's no line in the sand. We're not going to pick a level. There isn't a price point that we will do something at. But they're basically sitting at 154 at the moment, saying it's uncomfortable to be above 150. So what does that tell you is going to happen to this? Buy it if you want to, but personally, I think they're probably going to make sure it gets below 150. So, yeah, it's still a good sell. It's getting to the point where I'm going to jump in on this again. It's not it's a really tricky entry. This that's where I would jump ship, which is 1.5 ADR from where we are. So that's second intervention. Obviously, we had the 50% pullback. I got out of my trades on Thursday. Where are we? Monday. Friday, Thursday last week, I got out of everything down here. So I'm looking for a pullback, I think, on this leg, which is pretty much here. So there's a good opportunity to jump in on another yen short if you want to. It's a 61.8 retracement on the leg. So it's a deep pullback. I suspect you probably won't get much more than 71.9, but it might return to origin on that because we quite often see with these intervention moves a range form for a week or two. This could be where the range forms. So if you jumped in here and you added an ADR with an average in there, you might sit around in it for a bit, which is obviously going to cost a lot in swaps. But that's a pretty good short opportunity, especially after what they said this morning. 150 is not comfortable for us. We're at 154. They want it further down. Yeah. So this was making damn sure the market knows they can't go north. If they go north, this is happening to you. If you go north, we will take you out. So the market isn't going to want to drive very much further because it knows it's going to get hit again. So looks like a good short opportunity, doesn't it? So there's a good opportunity for one from a 61.8 retracement there for a short. And obviously, there's a reverse alert going to go in on the hourly today if it starts to drop. You can add on a break of that low as well. That's in at 152, which gives you another $2 drop. So you could easily get 3-4 positions short on that. By the time it gets down to 150, which is there, a nice profitable trade. But it's going to take, depending if they range it, anything from a couple of weeks to 1 week. Straight down there this week, we could be, couldn't we? There's no news catalyst this week much, apart from University of Michigan on Friday, that are really going to drive the US dollar this week. So we've got unemployment claims on Thursday afternoon, which unemployment claims aren't really doing an awful lot at the moment. It's unemployment rate we're interested in. And then we've got Michigan on Friday. So there's not a lot really that's going to drive the US, but we've had a couple of negative news events last week, which we know really hurt the dollar. So we know it's reacting to negative news much bigger than positive. So we get some negative numbers there, you could be down there easy. So if you look at it where we are here and where we're going to at 150, it's only 200 ADR. It's not, you know, a couple of ADR days, you're there. We could be there this week easily, couldn't we? So good opportunity for a short, again, on the US dollar yen, but I wouldn't position trade it. If it goes above that second intervention level, there's something wrong. So I wouldn't want to stay in it. So that's your news this week and over the weekend. What the hell is this thing? I suspect this is coming onto the market soon, whatever this is. There's some new product they've got coming out, which is going to be, I don't know, needing a degree in economics and a massive lesson to understand it. But yeah, anyway. Right. So that is the news this morning. Fundamentals, obviously, the Australian dollar, we got 4.35. We're expecting 4.35, no change. So nothing to see there at all. Inflation is nowhere near the 2%, which is where they want it, but it is coming down at a decent rate. So again, this is pretty much what was said this morning. We're waiting for the data. So we'll see what happens there. Some kind of heat map. Yeah, it might be. I don't know. Again, anything you see, you know, people get obsessed by this stuff. I've been down these routes many, many, many times. These massively complicated dashboards, these massively complicated well, they're not complicated, currency strength meters and stuff. Yeah. None of this gives you any edge in any way, shape or form, because all a heat map tells you is what's happened. I know what's happened. I can see it. The candlesticks have done that. Yeah. If there's a currency strength meter that shows me a big blue line on the Australian dollar being down there, I know the candlesticks without looking at a chart have dropped. It's not rocket science, is it? If it's weak, it comes down. If it's strong, it goes up. This tells you what has happened. Same way as a moving average or any indicator on any chart, RSI included, tells you what's happened. Reverse alert tells you there's been a structure break. I know, I can see it. Yeah. Heat mapping software tells you, go away, tells you that the energy sector they're buying the crap out of it. Brilliant. All the stocks in the energy sector will have gone up. I don't need to look at a chart. Yeah, it's all hindsight. Everything is hindsight in this industry. As soon as you look at this thing and go, hey, this is brilliant. Look, it tells me that thing's been moving up. I should sell it. The odds are the same. It's 50% when you sell it. Nothing to do with, you can use it as an entry signal. That's great. So if something's green, it's been rallying like crazy, sell it. No problem with that. It's not going to help you in any way, shape or form. Use the RSI. It comes built into MT4. It's absolutely free and it does the same thing. Currency strength. Australian dollar weak. US dollar strong. Where do you think the RSI might be on the New Zealand dollar, US dollar? I don't need to see the chart. Yeah. Anyway, all a load of rubbish. So, but they're going to sell you some kind of dashboard soon. If they give it away free, I'll let them off. I'll tell you what I could use, actually. The feed in the Discord channel doesn't have any of that blue stuff. So, right. Morning, everybody else. Haven't said morning to. Evil, no normal market movement, so basically no movement. Probably. Wouldn't surprise me at all. I'm taking profit really fast on everything at the moment. I've got a new little rule I'm going by. If you get... what have I closed out this morning? I can't remember. Euro odd. Yeah, so I closed this out this morning, Euro odd. There you go. Entry, exit. Yeah, look at the RSI. Anything that you get into, or anything I'm getting into, and after 2 or 3 days, if it's in a little bit of profit, if you look at your P&L and go, oh, there's a little bit of profit, just take it. Because at the moment, what we're getting is this nonsense, isn't it, all the time? And any opportunity to bank anything when the RSI resets itself around about the 50 level or higher, if you're going long, or if you're going short, if it's reset at 50 or it's below, just get out of stuff at the moment and just stick it in the bank, because all that seems to happen is it ends up costing an absolute fortune in swaps. So kind of my new unwritten rule, just get out of stuff if it's got a green number. Basically, that's it. Because likelihood is it's going to do that until the interest rates change, and that ain't happening anytime soon. Morning, Rodrigo, Sagar, Kenley, Champagne, JC, Roswitha, Chucks. On financial news, the FX chart with implied volatility and standard deviation looked quite interested. FX chart with implied volatility and standard deviations. Can Bollinger Bands show these standard deviations on MT4 charts? Yeah. I've said this many times in here before. Every indicator out there shows you the same thing in a different way. Yeah. Price action. All indicators show you. Yeah. Doesn't matter what indicator it is. If you stick MACD is probably the easiest thing. Stick a MACD on this chart, yeah? Right? RSI tells you that price has gone up. Chart tells you price has gone up. MACD tells you price has gone up. Trying to think of something else. Williams %R. What do you think might happen at that point in time on the Williams %R oscillator? Oh my God, look. You can't see it because it's blue, but it was started down there and it went up there at the same time as the MACD did, the same time as the RSI did, the same time as price did. Yeah. Anything that you see on a chart is going to do the same thing as price does it, in varying degrees of speed, with varying degrees of oscillation or smoothness. They're all telling you the same thing. Every oscillator on the chart that you can place on a chart is telling you there has been a relative strength movement in one direction or the other one. Yeah. As price moves up and down. A stochastic will get you there faster than everything else. Yeah. The stochastic oscillator will get you from A to B way quicker than most other indicators will. But you'll see that the Williams %R gives you exactly the same as that. The MACD started down there and got to the top a little bit later. The RSI, pretty much the same as the MACD. Yeah, pick one, doesn't matter. They all do the same thing. They show you oscillation in price. After price has oscillated in one direction, it tends to oscillate in the other way. That's the definition of oscillation. All these things are telling you the condition is up. Therefore, if you're a mean reversion trader, you go down. If you're a breakout trader, you go up. How you use them is irrelevant. They tell you the same thing, that there's a 50-50 chance that the price might go in your direction. That's all they ever do. Bollinger Bands. So if there's an indicator that gives you standard deviations, so if there's something in here that gives you a deviation, intraday highs or whatever, expected highs, expected lows, all that sort of stuff, yeah, those are band limits. So price will be there. The expected high and lows will be there and there. Therefore, yeah, you can use any kind of Bollinger Band indicator. You could use pivots, anything you like. They all tell you the same thing. There is a chance that price might do this. There is a chance that price might do that. None of them are going to help you predict where price is going because that's completely random, isn't it? They're all... But it's really good for making systems to sell. Yeah. Hey, hang on. Who haven't we used? Oh, the relative vigor index. I'm going to build a system based on the relative vigor index. You know why? Because no one else is doing it. When the relative vigor index makes a new high on the chart that you can see, it's a sell. Or it makes a new low to buy. Jesus, wow. I just created the Holy Grail. Sorry, it's Sarcastic Tuesday. There you go. Never even looked at that relative vigor index. Basically, it's stochastic. How's GJ looking? Yep, so all the ends, we'll have a look at all. Well, I'm going to go through every pair today because there's, as you can see, the RSI dashboard's flat. We've only got Aussie ADRs. So I'm going to look through everything today. But all the yen pairs have pulled back on the pullback from the intervention. So we're looking for that type of movement, assuming the Japanese are going to continue the strength. No idea where it's going to get back to, obviously, because we can't. But a lot of the stuff is done 50 to 68 retracements. So this is a 50% retracement on the pound yen at the moment. So 61.8, actually, that's hit 61.8 as well. So, yeah. Good looking sells, all of them. But, you know, I thought they were good looking sells before at 150s. They weren't, but they are now. So, I don't know. I would rather trade the US yen. In fact, probably the best thing to trade at the moment would be the euro yen. Because the euro is going to be the first interest rate drop next month. So the market is possibly going to start to make that move within the next few weeks because they move somewhere between 4 to 6 weeks ahead of the news a lot of the time. So if we're coming June for an interest rate drop, they're going to want to start to factor that in now, which means that we may well see a weak euro starting to form. So euro yen may well come down faster than the rest. And again, that's a 61.8 retracement as well. So, but I'm not getting into any other yens. I will take a US dollar yen short or a euro yen, doesn't matter. They'll both do the same. The reason the US dollar yen was the preferred short was because intervention moves liquidate US dollar to buy yen. The reason euro yens and everything else won't move as much as the others most of the time is because they're not liquidating euro, not liquidating pound, they're liquidating US dollar. So that's why the US dollar move tends to be the faster, bigger of the two. So what did that do? 235. So that did about 2 ADR, whereas the US dollar yen did 237. And about the same, actually. Actually, this time around, there wasn't a lot in it, was there? About 2 ADR on all of them. So it doesn't really matter which one you pick. My old favourite, the alligator. Alligator. Don't know if I've got alligator. I guess I have. There's a much better alligator than that. that's got many more lines on it. That makes it better. Alligator. It's just basically 3 moving averages. So let's lag price by 89, 89, and 89. I don't think that comes as, yeah, I was going to say, it's not normally those 3. I must have been testing something way back in when. But there you go. There's your alligator. So 3 moving averages telling you what's happened 5, 8, and 13 candles ago. Useful. Right. So RSIs today. We've got one, which is the Aussie dollar CAD on the 4-hour. So that's extended nicely. 4-hour RSI, or was this morning. It's coming down nicely on the news. Apart from that, there's no other RSI extensions at all. So yes, and it eats your bankroll. That's a good use of the alligator, eating your bankroll. Morning, EA. Yeah. I was just going to quickly see what happened to the breakouts this morning. No movement on the stock indices. So the DAX managed to move that far, and that's where it is still. Look at the volatility on the DAX. It literally isn't moving. FTSE back inside the opening ranges. No volume. I was hoping we're going to get some volume this morning because we didn't have it yesterday, but it doesn't look like they bothered to wake up this morning either. I guess they've taken the week off. So nothing happening on the stock indices this morning at all. Good. So yeah, so that's your only RSI extension at the moment. And obviously there's few ADRs on the Aussie pairs, which we'll go through in sequence. If they all tell you the 50% chances of up or down, why don't we just open positions randomly, wait for them to be green? Yeah, do it. I'm not joking, do it. There's a university study where they did that. And do you know what? It didn't make a profit. But do you know what? It didn't make a loss. Why? Because 50% of the trades won and 50% of the trades lost. Yeah. So if you do that, but you increase the risk reward ratio to 1.1 to 1, do you know what? Makes money. Simple as that. But you don't want to do that because all you're going to end up doing is being in, well, it's just not the best way to do it, is it? So this is what systems are. Systems and strategies are there to give you conditions and signals that you know repeat themselves, yeah? So the condition is an extended move in one direction. The signal is a reversal by the opposite party to the original direction. The exit is the bit that makes you money. That's the bit that screws everybody up because this is the part that makes the system work. Yeah. The condition has a 50-50 shot of being right. The signal has a 50-50 shot of being right. The exit could be one of 1,000 things. You could use a moving average. You could use a distance. You could use a percentage of its average daily range. You could use a Fibonacci level. You could use a moving average. You could use pips. Yeah. But that is the variable that makes the money. Yeah. This is the condition you've seen appear many times. That is the signal that tells you that the market might be moving in the direction you want it to go in. This is the bit that the variable that makes you the money. That's the one you want to test over and over again. You can see on a chart, historically, something happening over and over again. I can tell you when this RSI indicator, which is why I use it, gets to extended levels, the vast majority of the time, it pulls back from those levels. Yeah, that's the condition. That's why I use it, because it's a condition that is so simple, a baby could operate this. Yeah, make it easy. The signal is I want the guys that are going in the direction I want to go in to be in control of the market. Yeah, so you can see the outcome was correct. The distance, however, was that, that, yeah. Every single one of those is completely different. Yeah. The condition is the same every time. The signal is the same every time. The outcome after the trade works in your favor is completely random. This thing could drop 10 ADR. It could drop half an ADR. The exit is the bit that you need to focus on. Yeah. If you get the entry wrong, you can adjust your price. You cannot get the exit wrong, because if you've missed the exit and it goes against you for 3 months, there's nothing you can do about it. Which is why I say to get out fast, which is why I'm in and out the market as quickly as I can possibly be, because if I've got money there, I can put the money in the bank and spend it. If it goes against me, I can't. But this is the unknown. This is why people can't hold on to trades, because every time something pushes down and pushes back up again, they get scared. So they take it off with either a break even or virtually no profit when they should be getting a 3R reward on it. Can't do that bit. That's why people fail in trading, because mentally your brain is told to take things when they're in your advantage. If there's money on the table, I can use it. If there's drawdown there, I can't. So that's all a system is, isn't it? So if you flip a coin, you can do that, not a problem. It's a funny system, but it's got as much chance of anything else really working, isn't it? But this has got a better chance because we have seen an occurrence of this happening more than 50% of the time. So it gives us an edge. That's what an edge is. All an edge is a sequence of events that occur regularly that happen more than 50% of the time. That's an edge. That's it. That's the definition of an edge. It gives you an edge. The house has an edge on a roulette table with a 0. Yeah. That's the house's edge. It's simple. Our edge is a repeating condition in the market. But unlike a house, it's not cut and dry. We either take your money or we give you the money. Yeah. We need to decide how long we hold the ones that work to get out. And that's what propulsion gaps are used for, to tell you where the market is likely to go to. Because if you look at all the previous, and again, it's all looking left, looking at history. Previously, when you get propulsion gaps, they all get filled. Yeah. All these propulsion gaps in grey you can see on the chart here, apart from these 2 blue ones, are all filled. So if that is going to continue into the future, in the same way as the RSI, when it goes up, comes down, and you get reverse alert, and sometimes they go down, that's going to be the same instance again. That is the closest propulsion gap that would make sense to take your target. That's where my target is, at that propulsion gap. It could go there. It could go there. I have no clue, but I like taking money. If you want to hold it to there, you're probably going to be right. Up to you, isn't it? So your exit strategy is the variable. Your entry criteria is set in stone. It is a condition, a signal. I'm in. Exit, up to you. That's the bit that is random. In a coin flip, it's a head, long, tail, short. Exit, up to you. So, nothing wrong with the coin flip. As I said, a load of students did it. Wasn't profitable, wasn't losing. So they basically proved the point that on a coin flip with a 50-50 chance, the odds of it happening are 50-50. This is a binary market. You only have 2 choices. You can press the sell button or the buy button. Yeah, so you either do that or you do that. It's binary. It's exactly the same. The only thing you can control is when you get out, which is basically a stop loss and a take profit from an entry. These are the 2 variables you have control over. Nothing else on this chart, no other indicator, no price, nothing on this chart is in your control apart from that and that. Every system and strategy is looking for a way to make that profitable using historical data. That's all we do, isn't it? That's your job. In horse racing, it's called having an angle. Edge equals dollar, yeah. Morning, Daniel. Morning, Ismet. Right, so, morning, monkey. So, Aussie dollar CAD, So I'm just going to run through all the pairs in sequence. We'll have a look at them all and see what they're all doing. When I get to the ends, I'm just going to run through all the ends in one go because they're all the same basically. But Aussie dollar CAD. So we've had the news this morning, the 4.35 interest rate, which means absolutely nothing from a standpoint of bullishness or bearishness. As you can see, this is the market. So at the moment, we're up at the highs. We've just had news. The market's decided to react negatively. So you'd have to say, looks like they're going to pull it back from there. Whether they do a pullback, an exit and break that level or not will be determined by the market. So it's either going to go and continue this range or it's going to break out. Either way, it's going to pull back before it does that. So short at the moment on the Aussie dollar CAD. There's no... they are way behind the Aussies on the rest of us if you look at the fundamentals. So from an inflation perspective, which is what we are waiting for to drop those interest rates, the Aussies and the New Zealanders are behind everybody else. However, they're not actually far behind the US dollar now, obviously, as you can see, and the US dollar is in a bounce, but this will bounce as well. So the Aussies will bounce at some point as well. So for these guys, at the moment, the market is kind of saying, right, well, these are the last ones that are going to drop that interest rate. So these are going to be a little bit more neutral to bullish longer than everything else. So everything really should be a buy against these two. So there's nothing to say long or short on it. As long as that is the case, all you're going to get is market movement up and down. Yeah, and as long as the market is moving up and down, it gives us mean reversion opportunities. So you can take it long or short. Aussie dollar Swiss, very much the same thing. The Swiss franc was massively weak off the back of its interest rate drop. The market now seems to be not doing anything with the Swiss. It's very neutral. So there's no real advantage, bullish or bearish again on this one. It's all about the news. If you get some news, it will get pushed around. If the Swiss gets some news, it will either do that or that, won't it? So same as usual. You got nice divergence there, look. Bearish, which obviously is kicking in now. So yeah, nothing really bullish or bearish on this one either. So just assume when you've got no bias on anything, just assume that the propulsion gaps are going to get filled. Yeah, the market's going to want to just keep moving up and down, taking all these orders out and just move from propulsion to propulsion. Ignore that bit there because that was the safe haven run on potential expansion in the Gaza conflict. So all that's happened really is a 50% retracement up into the top of a range. They've just broken out the high of that range. So it's either going to pull back and continue to try and grind, or it's going to come back down somewhere into there, which is more probable. So Swiss franc powering up is very much on the cards at the moment. We've got the conflict in with Israel escalating. It looks like they're going in and clearing out Rafah. So that is going to mean potential flare point in the Middle East again. Depending on what happens there, we could see other countries starting to get involved in it. If that happens, there'll be a safe haven run on the Swiss franc. That is a safe haven run. That's the sort of movement you would get. So at the moment, we've got a bearish Australian dollar off the back of the news this morning, and potential for something to flare up in the Middle East, which will drive the Swissy higher, which drops this. So again, nice looking short, but it's obviously gone. We're ADR today on that one. So because we're ADR, you've got an opportunity on the 5-minute chart to take the next reversal alert long, which will be on a break of that high, and play the mean reversion back up into there. They're going to continue on a leg down. So you can do that in either direction at the moment as well. As you can see, it's just flip-flopping up and down constantly at the minute. So anyway, anywhere it can go. All the ends, same for all the ends. It's all to do with the intervention. So we've just had a gap fill intervention there. So the second intervention, they've actually undone that on the Aussie. But as the Japanese have come out and said this morning, 150 on the US dollar yen is uncomfortable. They're above that level, so we would expect it to drop down. So continuation shorts, I think, on all these yen pairs. It could just go into a horrible range. We don't know what's going to happen with it. It's different to what it was before. So I'm just staying out of all yens. I'm happy to take a short on the US dollar yen as a kind of gamble, with a definite exit above the intervention highs, because if it breaks that intervention high, there's a chance it can come back up into there. This is obviously Aussie yen, but on the US dollar yen, the chart looks similar. So all the yens, same thing. We've had the intervention, propulsion move, intervention, propulsion move. It's retesting this second leg. So looks good shorts across the board on all the yens. But we don't know what's going to happen with the yen. We don't know how much more ammunition they've got in the tank. It's a very, very, very different situation to what it was with the previous intervention. So, however, it was a lot faster. So the second intervention took weeks previously. They waited 3 days to do it this time. So this was a much bigger, stronger intervention than the previous one, because we were way higher than the previous one. We were $10 higher. So I suspect they will want to keep this on the downward trajectory, which means they will probably start buying some yen up. So we'll see. But that's all your yens. Aussie New Zealand has come back down into the bottom of this range. I've just got out of this on my other account. I was stuck in the Aussie New Zealand. Sorry. I had some weird beers this weekend. And every time I have weird beers, I get a spot come up on my nose. It's obviously some yeast thing, but it's just really annoying me at the moment. You know, when you get one of those big spots that's not actually a spot, it's just a big thing. Got one of them. Probably can't see it, which is probably good. Anyway, if you keep wondering why I'm touching my nose, that's why. It's not a signal. So yeah, we've hit ADR 125. We've tapped into the lows again. So this sort of 7-8 day range, we're at the lows of it. I've decided to get out of it this morning. It's actually rallying nicely. So you've got tweezer bottoms off the lows at the moment going in. Look. Yeah. That's that previous weekly low there to the pip. Bang, straight off. So I've got out down here today, and I've taken a loss on it of about 4.5K, which I'm very happy with, to be honest, to be out of it, because I've been in it since back here. So I had some aggressive drawdown control positions on, which has allowed me to get out. So it's good, but it's not good because it was a loss. But anyway, I don't know where this is going. The problem with the Aussie and the New Zealand is, as I said earlier, there is very little likelihood of any interest rate drops on these two in the foreseeable future. So with these two pairs, if one of them, as it has in this particular instance, gets the upper hand, in this case the Australian dollar, which it usually is, you get these horrible grinds, because there's nothing the New Zealand dollar can do to fight back if the Australian dollar starts to rally for some reason. In the same way, there's very little the Australian can do if the New Zealand dollar starts to rally for some reason. So this move here was caused by the New Zealand dollar interest rate not changing. This move here was caused by the interest rate not changing on the New Zealand dollar. This move here has been caused by the Australian interest rate not changing. Yeah. So what we tend to get is big, strong moves from absolutely no news all the time on these Aussies. So very, very unpredictable at the moment. I'm not trading this at the minute. I've just got out of it this morning. I've turned the EA off on the Aussie New Zealand for the moment because I don't like the fact that this is 100% neutral on both. Normally, what you would expect when you've got a neutral currency against a neutral currency with similar interest rates, both commodity pairs, both trade partners in the same area on the same session, is an awful lot of that. We didn't get it. And this is not the first time Aussie New Zealand has hurt me. I had got caught in the Aussie New Zealand squeeze back here as well. This one was an interest rate change. So here, the fundamentals shifted on the Australian dollar. So we had this lovely pullback in a beautiful long trend that we'd been milking and milking, making a fortune out of for over a year, I think it was, year and a bit. Yeah. Bought the crap out of this for years, made loads of money on it. Lovely. And then it caught me here. the interest rate changed on the New Zealand dollar, or the Aussie dollar, I think it was here, and we went into this death spiral. That was a fundamental shift. What we would then expect is what it normally does, this. So when this, and this is, again, Aussie and New Zealand moving in sync with each other because they're both increasing interest rates, both freezing interest rates. This is what you tend to find happens. Yeah. At the moment, that's not what we're getting. Look at the volatility. Volatility's gone up, and we're getting these really strong moves coming out of nowhere when there's no bias, long or short, on either of them. So again, it's one of those currencies, it's pairs, that's just acting very irrationally at the moment, in a situation that I'm not familiar with. Yeah, interest rate freezes. Not had one before, so I don't know. So we'll see what happens. But I've made the decision to get out of it at the moment and stay out of it, just because the swaps are so high. Squeezes I'm not adverse to. I can't avoid them. They happen. You have to deal with them, and you have to scale out and do drawdown control in them. The problem at the moment, which is different to what has happened in the past, is the squeezes are expensive because of swaps. I've not been in a situation with squeezes where interest rate differentials have been so vast, therefore swaps have been so vast. And that's what's killed me on a couple of these pairs over the last few months. Over 20% of the drawdown was caused by swap. Yeah. So 20-25% of the losses, nothing to do with the trading, just fees of trading. So difficult to really, I think, trade this one at the moment. But short term, you should see, in theory, very little movement. It should be this kind of, normal movement, not that sort of movement. But so Aussie, New Zealand, don't really know what's happening with it. If in doubt, stay out. I'm out at the moment and staying out. I think there's a good chance that it will pull back. This whole leg here, if you look at the previous time this happened, this whole leg was reversed pretty much. So we had the 50% retracement. It then stayed and then came back and tested it. Yeah, so this is equivalent to that, just smaller. So that is what I think we'll see, 50% retracement on the leg. But what it does after that could take forever. So I'm not willing to chance it. If it breaks out and decides to run for some reason, I don't know why. So if I don't know why, I don't really want to be involved. So I'm sticking clear of it at the minute. But there is no bias. So in theory, you should be safe longing and shorting it. Scalping, it's probably not a bad instrument to trade. High-low breaks and things like that. But don't know. The hell's that? Artifacts all over my chart. Aussie US, so really squeezed sideways at the moment. I've got a couple of shorts on this one at the minute. Yeah, it's very up and down. So RSI extensions should be absolutely fine on it. The bias, nice big massive horrible reversal there over 3 days. So we just pulled down into support on this one, and so we might get stuck in a range here, but I'm looking for a test of that propulsion this high. So I'm looking for that kind of price action, and then it can do what it wants after that. So yeah, I'm short at the moment on this one at the highs. Yeah, so we've got this lovely big high here, which we're reacting at again. We've got this range area here as well. We had a little dip out of it, price discovery, which failed. So there is a chance that we might get a price discovery to the upside, which will probably then fail and come back inside the range as well, because there's no real reason at the moment for the Aussie to be strong, as we know. There is a reason for the US dollar to be weakening, but we know it's not going to be till somewhere between September and December. So until then, up and down. So obviously the US dollar moves an awful lot on news. So we've got a good chance for this to do ADR hits daily in either direction. There's always news on the US. So you can trade that in any direction at the moment. Obviously, this is an H1M5 mean reversion from back here. Sorry, there. That was the first entry there. Second entry was taken up there, and then it's on its way down. So I'm hoping it's just going to come down and retest that, which is a 50% retracement. So if it wants to carry on market structure long, that's what it will do. That's where I'll be out. If it wants to bounce off these highs and form a range, obviously it's going to come down anyway. So that's that one. So that's your Aussies. Daniel, first past question, how much emphasis do you put on return on drawdown? For stop loss based strategies, well, yeah, you want it as high as possible. But drawdown risk, the reason people get so caught up in risk reward and return on drawdown is because this is what everybody teaches. Yeah. There isn't a bank or institution in the country that teaches this. Yeah, because it's not important. What is important is that bit. Risk. Yeah. Your return is undefined. As I was saying earlier, I did a little session on this earlier today, didn't I? Oscillators and things. You need a system and strategy to get you into a position. Yeah. For return, that is the thing that you can control, and risk. Yeah. So those are the only two things that are in your control. So most people want to get a high return on drawdown when they're looking at system permutations and all that sort of thing. It's important and it's good. The higher, the better. However, who told you that you had to have a positive return on drawdown? Yeah. If you had a strategy which over 15 years of testing consistently returned between 20 to 40% return on your account, yeah, you would be happy. Who told you it couldn't use 50 to 70% of your account to achieve it, giving you a negative return on drawdown? But it has never blown the account. It has always worked, and it's been consistently profitable, giving you an equity curve that looks like that over a 15-year period. Yes, it's lovely to have. I will always want to have it, ideally. But at the end of the day, if I've got something that is rock solid, robust, and I've tested it for 15 years and it just makes money all the time, however, it goes into 25% of drawdown to return me 25, giving me a 1-to-1 return on drawdown ratio, what's wrong with that? Doesn't matter, does it? Risk reward, people always say, you've got to get in there, you've got to put your stop loss there. This has to be higher than that. Why? You've got something with a 70% strike rate, take a 1-to-1. Take a 1 to 0.5 if you want to. You're still going to make money. Why go for the most difficult trade that takes 1, 2, 3, 4, 5, 6 days or so to play out when you can get out this afternoon with money? Yeah, everybody focuses on risk reward because everybody's focusing on strike rate. Yeah, you're focusing on the system or strategy that gets the entry right. That is impossible to get consistently right. As I keep saying, this is why I position trade, because I'm never going to get that right. I got in there because of that. That was wrong. I got in there again because of that. That was wrong. I got in again and it was right. So what do? Take 2 losses? No. You get out down here or here or here with some money. So it's always good to have a positive, and people will always disagree with me on it. But that's why I sit here and make money, and they don't, because I do it the way the banks do. You get in, when the market starts to move in your direction, you take the money. You're not going to get the entry right. Banks don't get the entry right. Why do you think they use DCA? Because they don't get the entry right. You can't, because you're a bank. If I'm a bank with 200 million to dump long into the market, and there's a bank there with 500 million to dump short, I ain't going to get it right. I'm going to get run over. But tomorrow, when I dump my next 500 million in or 200 million in, and they've only got 100 million, the market will move up and I'll get out. But I'm a bank. I can do that. we're not a bank. We can't do that. So we have to ride their waves. Yeah. But no one ever told you had to have a positive risk reward in this industry to make money. My return on drawdown or risk reward ratio is not positive. I make less money than I go into drawdown all the time. You've seen it in here all the time for years. That's what I do. I don't make as much as I go into drawdown. I go into drawdown by 5% and I come out of it with a 0.5%, 1%, but I come out of it with a 0.5%, 1%. I just use my equity to make money. That's what I do. I don't use my equity to guarantee a 2-to-1 risk reward ratio in everything I do, because I can't. But it's always good to have. So if you get results from a back test where you've got a positive risk reward ratio, I'll find my spreadsheet. So the return on drawdown ratio, that's 7.31. Yeah. Yes, that would be lovely. So it took 8,600 in drawdown and made 63K. Brilliant. But equally, that's good. That's good. Yeah. It drew down 13 grand and it made 6. It made 6. It didn't lose money. It just needed a bit more equity to make the money. Yeah. All of these make money with varying return on drawdowns. And the thing is, if you pick that one, you're not going to get it. If you pick that one, you're not going to get it. So let's say, for example, you pick that one, which is the worst one. Next year, the return on drawdown ratio on that particular set will be 7.2. Because next year's price action is not going to be the same as this test. Equally, that 7.3 ain't going to happen next year. That might be a negative 0.1. Could be a 1.2. Could be any number. It's just an indication of what's happened in the past. You can't pick the best one in the hope that it's going to happen again in the future, because there's no 2 days on the chart that look the same. So don't focus on it, because it's out of your control. That's what robustness testing shows you. If you run 20 tests using different variations on a strategy and all 20 make money, doesn't matter. Use them all. But there you go. Anyway. Yes, we Aussies follow the US dollar. Morning, Hennas. Morning, Virginia. Has anyone hear anything about E8? Closed all of my positions, not a breach, and won't answer any questions on their chat for 3 days. Probably going bust. Don't know. Not heard anything. They're all going pop because they're all getting caught, aren't they? So E8 decided to change the way that they do everything, but it's still not, I don't know. Don't go to an auction with that nose. Thank you, Steve. They did per poll something, then Match Trader, then MT5. Hennas, can anyone recommend a half decent prop firm that won't screw me? No, there isn't one. When people have got to wake up to this scam, really have. It's the most asked question I get in Telegram. People contacting me, which prop firm would you recommend? Which of your EAs is best for a prop firm? Guys, go to a casino. Yeah, if you want to gamble, go to a casino. If you want to trade, trade. But if you want to gamble, pick anyone. They're all the same. You won't win with them because they're engineered for you to lose. It's all fake. Binary options was exactly the same. Yeah. This is the new binary options. Next year, there'll be something else come along, like prop, like binary options, and eventually it too will get closed down by the Fed. Yeah. It's a scam. Go and ask the graphic designer that makes all of the the fake reviews and stuff. Yeah. All the fake reviews out there about everything, all the fake withdrawals, all a scam. All a scam. If you haven't got capital, you can't trade. I can't stress this enough. Yeah. This is a business. If you want to go into business, you need money. If you haven't got money, you can't go into business. It's not like, all right, I'm going to set up a business. What should I set up? Let's find the cheapest thing I can do. I know, I'm going to go buy a ladder, a mop, and a bucket and become a window cleaner. No problem. But don't expect to make money that is going to change your life. Yeah. If you want to earn 6 figures a year, yeah, you need 6 figures a year. End of story. You're going to earn at best 5 to 15% a month doing this. If you haven't got 100 grand, don't expect to earn anywhere between 5 to 15K, especially with someone that gives you a demo account and charges you $500 for it. Wake up. Not real. You can gamble on it, but don't expect the casino not to shaft you. Yeah? You're playing a gambling game. Therefore, the other guys who are crooks usually running these things are going to shaft you. Yeah. So again, if you've got 5 grand to trade prop with, i.e. you've $500 for a 100K account, and you say, I can last for 10 of these, right? Put that 5K in an account with a broker, and instead of using 0.5% risk, use 2%, 3%, or 4% risk per trade, and try and double that account up to something you can actually run your business with. Otherwise, just give it to the prop firms, because it doesn't matter whether you drip feed it to them over an evaluation, a funded account that fails, an evaluation that fails, an evaluation that gets to step 2 that fails. Then you're 2 grand down by the time you get to a funded account. You can drip feed it to them, or you could just give them the whole lot. Sorry, I know it's harsh, but that's the reality of it. That's what prop is. I'm fed up saying it. Well, not fed up saying it. People need to hear it, but I don't know why people aren't twigging. I had a guy, this is where are we? April, probably last year, who I was trading on, I think it was Apex at the time, in futures. And he contacted me and said, I'm really not getting it with futures. I've spent X eye-watering amount of money on evaluations and I still can't seem to get funded. And I was like, you've spent that much money trying to get funded. You know, demo accounts are free, right? Get a demo account. If you can get it through a stage where you hit the risk reward that they've given you, and then you can do that again, and then you can do that again, yeah, and do that 3 times on the trot, then go and buy an evaluation. You won't be able to do that. So hopefully that will prove to you that you shouldn't be giving these guys any money for you to prove the same thing you can do on any demo account with any broker for free. Yeah, that is it. Everybody wants the money, but they're not giving you the money. EA funding have now put it on the top of their website, haven't they? They're not even called EA. Yeah, they're EA funding now, aren't they? They had to change their name. EA Markets, they're called now. Please note that all accounts we provide our clients are demo accounts with fictitious funds, and any trading is in a simulated environment only. That alone should be saying to you, well, how do they pay me? They say they pay me a percentage. Of what? Fresh air? It's just, I don't know. Maybe I've been around too long. I've seen so many of these things just come and go. It's great. I made loads of money out of it. I was trading it for ages, made good money out of it. But I soon came to the same conclusion you have. Why has my account been stopped out? Oh, the wind changed direction. Did you not read term 2417 in the 3 billion lines we gave you to sign? No, I didn't. If the wind changes direction on a Tuesday, you can close my funded account. Didn't realise that. That's not in there, obviously. But there are clauses like that. It's hard for people to take trading not to be a gambler. Yeah, it is. Of course it is. But this is the thing. I have no problem with people doing this. If you want to do it, do it. It's fun, right? I like going, I used to bet on the horses a lot. I don't do it much anymore. I used to love going to casinos. I don't do that very much anymore. But I love going into casino. I love playing blackjack. I love playing roulette. But I walk in there knowing damn well that whatever I walk in with, I ain't walking out with it. Every now and again, I walk out and go, hoo-hoo, I just made $600. I only took in 200. once every 3 years. That's what happens. Yeah, if you take 3 evaluations, 1 a year, 1 of them will pass. What about support resistance bounces? I bet you've done that. That's what I do all the time. Yeah. That's why I have this indicator on the chart, Peter, as you know. Support. There is only support resistance. Yeah, this is support and resistance. This is support and resistance. Every line on the chart you see, every block you see on the chart is an area of potential support and resistance. Put a stop loss there if you want to use a stop loss and go down. All it does. Moves from support to resistance, resistance to support. That's my broker. Sorry, it's because I'm slagging. Look, it is as well. Suspected spam. I'm very tempted to answer one of those on stream one day because it's usually some Forex scam trying to scam me. Or a broker. But yeah, support resistance. That is all I did on prop. Literally all I did on prop. My prop account strategy was support resistance bounces. Yeah, when you get there, give it half an ADR, get in short, get out. That's it. That's all I did. Literally all I did on prop. I did some scalping on it, but hourly and 4 hourly support resistance. So it's basically daily, weekly support resistance levels. Bought them like that. Buy that. Get out. Yeah, that's where we opened. That's your weekly support. That's your weekly high. Sell it. That's what it does. But what you will have at some point, which is why the prop firms have the 5% daily and the 10% overall limits, they know that you will risk 1% plus per trade. Yeah, one day you will have 5 losing trades. And if you risk less, you'll have a losing run at some point of 10 trades in a row. But you won't get to 10 trades in a row because by the time you've lost 5 trades in a row, because you're a human being, you will double your risk and the next one will blow your account anyway. Because somebody's dangling 100 grand of fake money in front of you and you want it. So you don't trade properly because it's not real. Yeah. If I gave you 100 grand in real money, you wouldn't be trading anywhere near the same, or I hope you wouldn't, as you would on a demo account because it's not the same. You're trying to trade a real account mentality with fake money and you know in the back of your head it's fake money, but your brain is trying to trade it real, but then it goes, screw it. All in, because that's what you do. Because what impact does it have on you? Well, I spent $500 to get the 100K. I'm in 8% drawdown. I've only got 2 to play with. I can't be asked to get back there. I'd rather just buy a new evaluation. All in. That's why everybody blows their accounts. It's not real. None of it's real. It's all of just playing fake, isn't it? Morning, Yusuf. Reckon FTMO will disappear? FTMO is a bit of a difficult one because FTMO claim that they use third-party. They have a third-party supplier for equity. Oh my God! Using Cloudflare. Yes, I am human. So, of all of them, they are the longest established out there that is still there, and they are still going. I don't know whether they will survive or not. They're based in, all their payments and everything is all based in euros. So the problem with all these prop firms is they're all getting shut down by US regulations. I'm not, Czech Republic, I'm not 100% sure whether it's that they can't get to them because of where they're based and how they're operating or what. But whether they have got money, I don't know. They won't publish the accounts, and the accounts that they publish certainly do not show that they have third-party funding. So I don't know. Who knows? But if you want to try it, try it. Rules are the same. I don't know. Sorry, I meant to build an EA on support resistance. Yeah, I've got one. I've got loads of support resistance EAs I've built in the past. Loads of them. None of them work. Because you can't... This is the thing, Peter. And this is what I keep saying, right? I can show you this, but this is never going to happen again. I can build an EA to backtest support resistance bounces, and I've built support resistance bounces. I even have one here. Basics SNR simplified. Try that, see what it does. I've built loads of models based on support resistance bounces, and they all work sometimes, and they all fail sometimes. If it uses a stop loss, it doesn't. Because it will get to a point where it just won't work. There you go. That was a support resistance bounce entry there based off of that resistance. The candle was massive in that case, which is why it didn't work. Yeah, but this is the thing, right? This is the problem with building EAs and backtesting strategies, right? There was a resistance level there, which was a weekly high. The EA was told, if we hit this level and we reject it, enter a trade. It did, with a whacking great green candlestick followed by a whacking great red candlestick. As a human being, I wouldn't take that trade. Because look at it, it's already played out. And it got in short after the move. Because it was a news event of some kind, I would imagine. If I put a filter in it to say the candlestick must be below a certain height, what does that introduce? A variable that I need to robustness test. And from that will come a set of instances where it doesn't work. Therefore, I have introduced a complexity based on historical information that will never be repeated in the future. So therefore, it can't be used. Yeah. Eyeballing stuff works. That resistance has been tested and it rejected that resistance. What do you class as a support resistance bounce? Yeah, it could be that. It could be that. It could need to do that. And then that. Yeah, there's 1,000 ways to enter the market at support resistance as well. How do you determine the rules? Yeah, give 10 people a resistance line like last month's high there and say, you've got to play a resistance bounce off of that. Some of them will draw a box. Some of them will need it to hit that to the pip. Some of them will give it a variance of 10. Some will want it to have shot over it by a quarter of an ADR and then closed back below. Some will want a spike through it and a close below it. Which one of those do you use? Because they all give you 100% different results. Yeah, I've built EAs that do all of this. They all give good results sometimes and bad results the other. At the end of the day, price moves from support to resistance. That is a previous resistance, which turned into support. But not one of these is in the same spot using the same candlestick pattern that you could identify to say, I'm going to take that one. A human being can see after the third bounce there is pushed away. That looks like a good looking long with a stop under there. Oh, I got stopped out and then it ran. So, okay, so the stop needs to be longer. Another variable. See what I mean? It's impossible to generate an EA that is intelligent enough to be you. You can build it to be stupid, in which case, and this is partly why I've got the Price Action Toolkit. Yeah. So if it gets up to here again, right, if it was to trade up to here over the next 3 or 4 days, right, and we saw it hit that level and a whacking great bearish engulfing going in, hit that button. If that whacking great bearish engulfing is down there, don't hit that button. That is a human being deciding that that resistance bounce looked good, but unfortunately the market moved too fast and I couldn't get in on the action. If, however, you were looking at that on the 15-minute chart and you saw it 15-minute candle close there and you pressed that button and then that hourly candle closed down there, you went, brilliant, I'll take that, please. Can't teach an EA to do that. Did bounce at resistance. See what I mean? There's too many variables, which is why I built the position trader EA, because you can trade support resistance bounces beautifully, but you can trade them. It doesn't know what is the best thing to do. Some people would have taken that, look, but that's a reversal of that. There's a resistance. There's a rejection of it. It's a discretionary thing. All trading is discretionary to an extent. See, look at that. Beautiful. Lovely, lovely long there. Lovely short. Look at that short. What is that? Beautiful resistance bounce short. But it also took a long there off of that resistance bounce low and got completely run over. And it got out of that short there where it should have got out of that short down there. Too many variables. You can back test it and it will give you a lovely equity curve. Yeah, this is looking like a lovely equity curve, look. No, it's not, because it had a losing run of 1, 2, 3, 4, 5, 6, 7 trades. That nearly blew my account at 1% risk, didn't it? Took 7 losing trades on the trot. I can only use 10 because I've got 10% drawdown limit on my account. We're going off on a tangent here, but see what I mean? But I can tweak the inputs to make it profitable over this time period. Yeah, as Ross Weathers just said as well. Fundamentals, yeah. If the euro rate had just dropped this week and the thing went long on a support bounce on the euro, you'd be like, what are you doing? The euro rate's dropped. It's gonna go weak. Yeah. It can't do that. What do you do? Get a system that drags in interest rate differentials and then gives it a bias. This is not something that can be fully automated. Just can't. But I've tested it and it's brilliant. But test it yourself. You don't need me to test it. Yeah. But go into the back tester yourself and just go and you can use the position trader EA in the back tester because obviously you can use the buttons. So if you just go into the back tester with a position trader EA, and stick it on control points, I guess, on the hourly. Buttons in the tester. And just run it in the tester. And hit the buttons when you get to support resistance. Yeah. So get ready to sell. Close below. See, I know this is going up because I saw that on the chart a minute ago. I'm cheating. I don't know how long it takes to go up. I can't remember, but it does go up. But that is and again, you know, it's like that is a resistance bounce there. That's a resistance bounce. But if you took that, you were successful. If you didn't take that, you're about to get stopped out. Out. There you go. I made money out of a support resistance bounce that didn't actually go anywhere. Or did it? Discretionary. So that's just broken out now. So when it pulls back, wait for it to pull back into support there. No, it broke. So test it. I'm not going to sit here and do a back test, but test it yourself. So it's back to purse snatching to build my live account. Yep. You can do that. I wouldn't advise it though. If I was on your shoe, I would create a Forex hedge fund since you could bang 5 to 15% a month. Do you know how much capital you need to run a hedge fund? A lot more than I've got, put it that way. EA does not know if there is fundamentals yet. There you go. Right. I don't know why we went off on those tangents, but we did. But anyway, back to analysis. CAD Swiss. So CAD Swiss basically is sideways, as you can see, pretty much. There's no fundamental bias on either of these at the moment. There was a long opportunity in there. Lovely reversal and retest, which is playing out. Look for it to push up into that propulsion to retest it. If not, that's the Swiss franc intervention. Safe haven run. So that area there kind of is where price was mucking about. That was just a no event. So potentially, we're kind of just stuck in a range here at the moment. Again, there's no real bias either way on either of these at all. So longs and shorts based on RSI extensions should work out. But again, this sort of thing here. So if you get an RSI extension and it hasn't worked out after 3 or 4 days, just get out. It's going to cost so much in swaps to hold it. So there's no real bias anywhere on this at the moment. So we're just sitting there waiting for something to happen. So euros, all the euros should be bearish bias as of June. So we're not quite sure. Well, we are pretty sure in June they're going to change those interest rates and drop them. We're not quite sure how much at the moment, and we're not quite sure how often after that they're going to do it. But market is starting to factor in a drop on the euro. So I would be much more comfortable at the moment this month taking short opportunities. So RSI extensions to the upside, ADR hits to the upside. So you got an ADR high hit there. That's why I got out of this one this morning. Yeah. So we've hit ADR. There's a chance that it's probably not going to get much chance to squeeze much further than that. Market structure, obviously bearish. Looking for a potential pullback and drop scenario on that one. So any areas, any RSI extensions to the upside, be good short opportunities. If you like fib retracements, 50, 61, 71. Yeah, just look for reversal alerts on lower time frames on these bigger legs to pull back. Euro CAD, I've got that one short at the moment. This is totally sideways, totally sideways. Has been for 2 months now. That's your 2-month high and low. We're just stuck. We are actually sort of contracting here as well in a symmetrical triangle. So you've got symmetrical triangle formation, meaning that the market is contracting before a big move. Euro rates, it was the most likely move. So good looking short opportunity. I got 2 on this at the moment. Obviously, you would expect if that euro rate does have the desired effect and drop the euro, then obviously we're going to be dropping quite fast and hard. Euro Swiss, again, very difficult, this one. It's a bit of a mess, the Euro Swiss, because the Swiss franc and the euro tend to move together. So this is a little bit like the Aussie New Zealand at the moment. I've taken the Swissy for the moment, short term, off my list of pairs that I'm trading, mainly because of what's happening in the Middle East. But because they also have dropped that interest rate before telling us, which they have done before. They did the pump before without telling us. And they removed their peg without telling us. They don't tell us anything. They just do stuff, which means it gets very erratic movement, which normally is not a problem because it normally is undone and it makes you money. But at the moment, I've just got this weird feeling something is going to happen in this Middle East conflict that is going to escalate, which means that this is going to do nothing but that. So I would be much more interested in shorts on the Euro Swiss, but the ADR on this is fairly low. And it has the ability, as you can see here, same as the Aussie New Zealand, to go into these continuous, like, they're not even squeezes. They're more what I would call a grind. You don't get any price action in market structure. It's just grinding in one direction for weeks and months on end for no real apparent reason. So it's more short than long, purely based on the euro interest rate drop. But other than that, not really interested in it at the moment. So you could take it in both directions, but I think probably you're better off shorting it than longing it. Euro pound, I'm short at the moment. Again, euro going before the pound. Pound is not going to go until September, we expect. This is the smallest ADR on the planet, 28, always has been. It's we are close trade partners with each other. We're in the same time zone. It's just range bound 99.9% of the time. You get the odd price discovery move off of news, which A-shape recovers, and that's it. So it's more of a short than a long, but things can change very quick at the moment. With this pair, though, it's very hard to make money out of because it sits there forever and doesn't move. As you know, I was in this for months, sitting, trying to get to my average price, which was here, sitting in this. Making money out of it constantly, but very, very hard at the moment. So RSI extensions to the upside or downside, all good. So yeah, just get in if it gets extended, really. But doesn't give many entries at the moment. Euro New Zealand, again, very, very stuck. More bearish than bullish. We're kind of in a bit of a holding pattern on this one again at the moment. All the price action is to the downside. Yeah, so looks more bearish than bullish. So looking for extensions to the upside. I had a short on there, which worked out very nicely. So there's your RSI extension. So that was a nice. I didn't get anywhere near that, but yeah. So again, lovely. Look, again, this is something else I've built an EA to test. Yeah, support resistance, 3-bar reversals. Yeah, so if you have been in here for a while, you've heard me talking about 3-bar reversal patterns many times. 3-bar reversal is a push, a pause, which is either that or a doji style move, followed by a pull. That's your entry to go short. So it's the market, like an aeroplane running out of fuel, exhaustion. Yeah. Push, pause, pull at a monthly resistance. Beautiful. But how do you define that 3-bar reversal? Yeah. And this is where EAs are at a massive detriment to you as a human being, why you will never be replaced. Because that is a 3-bar reversal to me. The definition of a 3-bar reversal is a push, a pause, and a pull. How big is the push got to be? How big have the wicks on the push got to be? If that is a pause, how big is that head going to be on a shooting star? Or does it have to be a doji? If it's a doji, does it have to be a deadstone doji, or could it be a spinning top? When it pulls down, does it have to break the low, or does it have to break the open? Or could it be an inside bar on that candle that caused the push? Yeah. Can it have wicked up above that or not? Does it have to be a big candle, a little candle? Can we have a wick on the end of it? I don't know how many variations I just ran through there off the top of my head, but multiply each of those variations by itself over and over again, and you've probably got around about 20,000 different combinations of candlestick patterns I've just said there. If you tested every variation of them, they're all a 3-bar reversal, but defining it in code to work at a level of resistance, which could it go through it? Has it got to hit it to the pip? Can it fall short of it? If so, how far? If ADR is contracted, should we go further or less? There's a billion combinations. I see a previous monthly high, the market pushed through, got exhausted and reversed that. Hit the short button. But no, we don't use wicks. Oh, okay, so you define it as that, do you? In then case, you should have taken that one, which is a bearish engulfing over 4 candlesticks of that original move. No, it's these highs. That was a stop run. This is the actual resistance. Okay, so you get in there. You see what I mean? There are a billion ways to take the same trade. This is a resistance bounce short. Define it. It's possible. This is why, and once you've defined it, yeah, go back and find me exactly that happening again. I can guarantee it's not going to happen again in the future either. is why trading is so hard with automation and testing, because there is no testing that can define enough variations, which is why system parameter permutation testing is the only reason you should be using the back tester, is to test. If I was to take the open or the wick or the previous highs before the high, and it had to make a high equivalent to that within a variation of half an ADR there, and all those variations, do they all make money? Yes. Okay, then when resistance works, that's your outcome, isn't it? How far do you get out? I have no idea. Too many variables. Possible. That's a really good example, though, of why backtesting, and again, I get asked all the time, what's the best set file? That one. No idea. No one has. Euro New Zealand. So yeah, highs, lows. Much rather be short than long, but you are going to be able to get out of long opportunities in likelihood, because if something is going to start to trend down, these bounces are playable, but you want to be out on this faster than those, because the stance should be going bearish on the euro at some point soon. Euro US dollar, we're coming up into this propulsion move off the back of the news. Obviously, you can see it's bearish at the moment. So that quite possibly is the peak on the pullback, in which case then it's a lovely looking short opportunity. So there was an RSI extension there. Didn't get into that. $4.20. RSI reading was just shy of the 70 level when I got the signal to go short on the 5-minute chart because of that big move up. So I didn't get the short on that, but I would be short on that. I'm going to take a manual on that, because that trade, I think, it just didn't quite the rules. Again, this is the thing with rules, talking about thing, right? You look at it on a chart and you go, hey, look, that would have been a beautiful short. Let's assume it plays out, yeah? Same as that one would have been a beautiful short, yeah? Based on the exact rules in your system or strategy in your EA, my EA didn't get me into that, because as the 5-minute closed back down below the signal, the condition just undid itself. Doesn't mean it's not a good short, in my opinion. I like it, and if it pushes up further into that propulsion gap, I'm going to like it even more. So I'm happy to take a second up there. But that's what the buttons are for. Take a manual. So that's an RSI extension, H1M5 entry. So I like it short. Euro, based on euro dropping on the interest rates. US dollar at the moment, the only fly in the ointment with the US dollar is it does seem to be getting hammered by bad news at the moment. If that continues, we've got University of Michigan and unemployment claims this week. Could get a bit of bullish movement on it, but we will see. But like it short. So market structure on this, quite difficult to draw in, but you know, that's a basic market structure, bearish, isn't it, at the moment? So if you look at where we're heading, you've got your, obviously we're in a range as we are with everything at the moment. You've got a couple of range lows there. Yeah. And again, defining a range. That to me is the range low, which if you actually measure it is probably about an ADR. Yeah, that's how wide I think there is. You could bounce anywhere in here. You've got to teach in EA which of those to take at some point in there. Again, very difficult. And it might overshoot it a little bit, but that is where we were going to find some limit orders triggering there. If the interest rates, if we hit this level, by the time the interest rates haven't changed. So again, by the time we get there, I suspect the market will be a very different view on bias on this. So, but for the moment, looks like a good short. Pound odd. There was a long opportunity again on Friday down there, so which will have played out this morning, but That's pushing up into propulsion now. So again, bias on the pound. Very difficult at the moment because we've got the interest rates this week and Bailey speaking. So when Bailey comes out on Thursday, really? JPY seeing some additional upside on the news that Ueda is visiting the PM. Are you sure that Ueda popping off for a meeting is a reason to start buying the yen? Bank of Japan stands ready to keep a close eye on how the yen moves affect trend inflation. Yeah, so no more real movement. Talk about the financial, the FX moves there. So yeah, Bailey this week, 12 o'clock or on Thursday, we've got the rates, and then we've got Bailey speaking at 12:30. So with the pound at the moment, the market seems to be anticipating September for the interest rate drop. So until September, this thing will probably just move up and down on whatever news we get, or August type, so summer basically. So the stance on the pound at the moment is neutral, with a bearish slant in the future. So compared to the Aussie, which is no one's got a clue, this is probably slightly more bearish than bullish. But intraday and intra-week, it can do whatever it wants. So any RSI extensions you'll probably find will be okay to take on this as well. So pound odd, pound CAD, all these, lovely market structure on them. Prices pushing and pulling very nicely. They're undoing moves. Profit takes are happening. V-shaped recoveries. The usual stuff we see is just happening all the time. So all of these just RSI extensions, upside, downside, scale in, scale out as usual. ADR hits, but there's no real bias on it. I'd much rather be short than long, but at the moment I don't really care. It's too far away. Unless on Thursday Bailey comes out and says something about interest rate changes. Pound Swiss, again, same as Euro Swiss, very difficult at the moment, based on what's going on with the Swiss franc. So I'm not really interested in Swissy at the minute, until things start to calm down, if they ever start to calm down. But lovely push up into there and drop would be ideal. So if we can get an RSI extension to the upside, good short. At the moment, it's not really doing much at all. But the market structure is obviously bearish short term, based off of that move there. So if we can get back up into there, looks like a good short opportunity. You got monthly highs here. Look, that the market really doesn't want to go through. Look at that head and shoulders textbook. Don't get many of those. Pound New Zealand. Oops. Same thing. So I'm longs on this one at the moment, off the bounce. Yeah, so lovely support. So this is a previous area here. Yeah, so that whole area there. Market pushed into it, 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 tried to get through it, hammered back again, pushed, pushed. News broke, propulsion, retested it, pushed up, retested it, retested it, retested it. Support resistance. Turncoat support, as you call it, if you're using supply and demand. So good looking potential bounce back up into this range here. It's your range high and low. So get out somewhere in the middle. I'm getting out here. Just want to get out with money at the minute. So trying to get out as fast as possible. If it does break support here, it's going to take some strength in the New Zealand dollar. Bear in mind the Aussie's just weakened, and that will drag the New Zealand with it. It's going to take something bad to happen on Thursday in Bailey's speech, really, to drive the pound down. Until then, we should be seeing, hopefully, some continuation weakness in the Aussie and New Zealand, which will help this to rally. But that is your next area that we'll be heading for. So there's a possibility of needing to scale into 3 or 4 positions on this one. by the time we get there, that move won't have had a profit take on it. So we'll tend to get a big, strong move back on a profit take move on that entire leg. So that looks good. Pound New Zealand, pound US. Again, US dollar, it changes. On FOMC last week on non-farm payroll, we had change in when the interest rate was going to change 3 times. We went between September and December. It changed literally within minutes where the market thought the interest rate change was going to go. It's just nonsense at the moment. There is no directional bias on the US dollar. It's purely driven by CPI. If CPI goes up, US dollar goes up. CPI comes down, US dollar goes down. It's all about CPI inflation. And it's bouncing very, 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 very hard for the US at the moment. So it's very, very difficult to forecast the direction on it. So if this bounce continues, that US dollar rate could go up still. Yeah. So I think it's very a very brave person that would be a bearish stance on the US dollar at the moment. However, it will get affected by its news a lot more on negative news than bullish news. So it's just driven by news at the moment. So get some news, undo it. Yeah, that's what we see. News, not sure. Wait for the next news. News, undo the news, waiting for the next news. Yeah, so we're just waiting for news. Could go either way. So until then, RSI extensions as normal, but get out fast, because when there's news coming, it'll either go your way and make you a load of money, or it will take you into drawdown and it could push for days against you. So the stance on it is bearish at the moment, but not very strong. These moves are, they're all pulling back very nicely. Yeah, all market structure is gorgeous. This is exactly what we want as position traders. Stuff that just goes up and down with 50 to 60% retracements. You can't not make money in that market. It's impossible. Can't not make money in it. So as long as it continues to do this, just keep getting in when you get any signals. New Zealand, again, sideways. Got short on that one this morning. No, I didn't. I got short on it on Friday. So again, getting out ADR. So we've got these highs, which is that previous low. Yeah, so we hit it, tested it, broke it, retested it, retested it, broke it. So my TP is before we retest that level. So that was an RSI extension on Friday. New Zealand dollar Swiss. Again, it's just stuck. The Swiss franc is stuck. It's very fits and spurts, as we know. I'm not trading this one at the moment personally, but we've got that propulsion gap, which looks like it wants to come and retest. So you kind of got equidistant at the moment between the two levels. It could go up. If it goes up, that. If it goes down, that. Yeah. So it's very difficult to call which way it's going to go at the moment. It's just basing in the middle. So there's no signals on it, bullish or bearish in it. New Zealand US, got short on that one at the moment. Again, looking for a retest of this level at the minute. So looking for a propulsion gap fill, and I'll be out. And it's obviously, I'm assuming that we're going to continue to sell into this level. Yeah. So this is very clear market structure bearish continuation. So, if you want to hold it for days and days on end and go for a test of the lows, yeah, you got propulsion gaps down there to aim for. If you want to continue market structure bearish, hold it for a swing all the way down below 58,600 level. US dollar CAD long at the moment, pushing up. That was off the RSI extension again on Friday. It's a decent level of support resistance there. So see if we can come and retest this reversal alert. at 125 ADR. But that's sort of 3/4 in that range. So looking for a pullback, potential continuation short on it. But don't know at the moment. There's no real bias. US dollar CAD, again, like Euro US dollar, like Euro pound, like Euro Swiss, like Aussie New Zealand. Very close trade partners. Their economies affect each other. Therefore, you tend to get an awful lot of that. So it's got to have a fundamental shift or fundamental bias strongly in one direction or the other with one currency or the other to make this thing trend, which it doesn't do very often. So again, I get a lot of this, and the size of the range will be dependent on the impact of the news. But again, that's Head and Shoulders. Oh, it's twice I've seen. Don't see any for ages, and they come along like buses. So yeah, nice support bounce off of the monthly highs. Yeah, so it looks like at the moment it wants to form a range up here. So long at the minute, but again, this is totally driven by news, the US dollar at the moment. So if it comes out with bullish news, we get a lovely ADR hit to the upside. If we get bearish news, we get a lovely ADR hit to the downside, and then it usually just undoes virtually all of the move over a period of time. Yeah, lots of A-shaped and V-shaped recoveries on this at the moment because it's just knee-jerk reactions to stuff that we know is not going to be affected by anything but interest rates, or inflation rather. US dollar Swiss, again, Swissy, not sure about at the moment. You've got a lovely propulsion gap target to aim for to the upside. So you've got this big old accumulation in there. More of a long than a short at the minute. RSI extension was down there. You'd be in that slightly in profit on it at the moment. That came off that wick, which was the, I think, was that the news? I don't remember what that was. But anyway, support holding at the moment, so up into there. And then this was a price discovery move to the upside, which has failed. Usually if you fail, you quite often won't get back to it. So I suspect we might see some weakness coming in this. Bear in mind, obviously, if anything kicks off in the Middle East, the Swiss franc is going to power up, which is going to drive it down too. So multiple reasons really for being a slight short bias on it. And our good old friend US dollar yen. Really tempted to short, but I'm not going to do it on this account. I'll do it on my other one because it's funny money. That's it. Covered everything. Euro US dollar I've already covered, Stefano. Short on that at the moment. To put a target on that. Pick a target to the downside because it's just chop. There we go. That's all I got for today. We've covered everything. It's 10 to 10. There's no news today, so it's just a case of watching stuff because there's nothing else to look at today. Market's going to basically just flip-flop around until Thursday because there's no news tomorrow. We've got no news for the rest of today of any impact. We've got a bank holiday. Bear in mind if you're trading the DAX, there's going to be lighter liquidity today and tomorrow. Tomorrow and Thursday. It's a German holiday. In fact, the DAX will be shut. Oh, no, they don't shut the DAX, do they, on bank holidays in Germany? Pretty sure. But yeah, so, I mean, you can see by the DAX today, it's not really setting the world on fire, is it? Although it is on its way to target, so hedged on the FTSE. Yeah, so really it's just a case of waiting until Thursday and to see if we get any kickoff of this interest rate announcement and, more importantly, Bailey's speech. So this week, if we get a strong move this week in one direction from obviously what we had yesterday, which was little, but until Wednesday, there's a good chance it might just undo it as we're staying in the range. RSI2 still killing it? I don't know. I'm not trading it. I'm just testing it at the moment. I haven't done any more testing this weekend, but I have decided on a set file, I think. Well, I've decided on a set file I'm going to robustness test. Slow workbook. 58% of your workbook has unused formatting and metadata that can be optimized. So yeah, I think what I'm going to do, I've decided to try, and I'm going to test this over a decade across all FX pairs just to see what the portfolio looks like. But once we get the RSI2 extension, scaling in at half an ADR on additional positions, targeting 1% of movement, so 1 ADR, and 1.5 ADR on multiples. So if it pushes down, enters, and the move works, get out with 1%, 1 ADR. If we have to get into 2 trades, an average in, we get out with 1.5%. And drawdown control is done at 2 ADR. So because we're scaling in at half an ADR, it gives a possible 3 positions. So first entry, second entry, third entry. By the time you get to take the 4th entry, the first one will close. So you're basically dropping your average as you're closing out losses, meaning you can get out of it quickly. So that seems on my testing at the moment to be very robust. But look at we're talking about return on drawdown earlier. 1.03 is the return on drawdown. Yeah. So it went into, in this particular test, it went into 15 grand of drawdown and returned 15 grand. What's wrong with that? If it consistently returns 15 grand regularly, I don't care. It's like someone walking up to you and saying, tell you what, give me 100 and lend it to me for 3 weeks, and then I'll give you back 200. Yeah, so you get your 100 back and 100 on top of it. Would you turn that down? If you're going to argue, I'll give you 100 and then I want you to give me back 300, the guy's going to go, nah, not going to do it. Nothing wrong with having a return on drawdown that is similar to what the drawdown is. Yeah, that's what drawdown is there for. Your account, however big your account is, its job is to be used to make money. Yeah, businesses set up with 100,000 in the bank. First thing they do is they get a shop and fit it out and spend 30,000 of that. Then they spend 30,000 of that on stock. There's 60k in drawdown before they even open their door. Yeah, we don't have to do that. We got 100k. We might go into 3 to 5k of drawdown before it pushes up and returns us $1,000. So what if it went 3k to return 1,000? What's wrong with that? Returned 1,000. Nothing wrong with it. Don't know why everyone's so focused on it, but ideally, yes, you want it bigger. Much bigger. But it doesn't always work that way. That went into 12 grand of drawdown. Same settings this is. Same settings, different test period. That went into 12 grand of drawdown and returned 26k. So a 2.08 return on drawdown. Exactly the same set file, exactly the same strategy, different period of time, completely different results. That's what robustness testing is. Test it there. Did it work? Yes. Right. Test it there. Did it work? Yes. Test it there. Did it work? Yes. It works. But yeah, so I've got a lot more testing to do. Testing takes time. But it's looking good. But that's just the position trader EA, so you can do all this testing yourself. Just use RSI2 and whatever you want. Right, I'll leave it there today. I'll be back tomorrow at a different time. We're afternoon session tomorrow. At 2:30. So yeah, no news day. So just going to do analysis. If it might be a short one tomorrow, to be honest. If nothing's moved much, obviously there's nothing much to talk about. I'll trade the US Open tomorrow. with SIH and look at see if we can make some money out of the stock indices tomorrow afternoon. But yeah, there's nothing much else happening tomorrow news-wise, so it's a no news day. So any FX movement is going to be just FX movement, and we'll see what happens. But there's nothing really to talk about tomorrow. So it's all about Thursday, in which Thursday will be a morning session because obviously we'll be looking at the interest rates. Sorry, no, it's not Thursday. Sorry, Thursday's 11:45, late morning session because I want to be on for the announcement and for the press conference, so we can see it unfolding and see if there's any real reason to change stance on the pound. All right. So anything else you need, I'll be in Discord and Telegram. Other than that, I will be back tomorrow afternoon. All right. So have a good day. I'll be in there if you need me. All right. Have a good one.